Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Dale Carnegie, who said, "Inaction breeds doubt and fear. Action breeds confidence and courage. If you want to conquer fear, do not sit home and think about it. Go out and get busy." Our aim as we give you our upfront no BS approach to all things stock market is to help you overcome any fears you may have around the market so you can take more action. For our main topic tonight, we take a look at some of the best energy stocks you might consider buying as we look at the top 3 coal and renewable energy stocks. Stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Good evening, Ms. Cox. I actually like your quote.
Do you?
It's very apt for today, isn't it?
With the market falling?
It is. So many people get frozen when the market's doing what it's doing. We just get more excited.
It's coming down. What's going to happen next?
Well, we'll talk about that later, won't we? I think
You
we'll
promise?
get into it later. No, I absolutely promise we're going to talk about it later. But so often when the market's doing what it's doing, people get frozen. They don't do anything. They don't act. But if they're worried about the market, that means it's telling them, it's a big signal to them that they don't know enough. So they should take action.
Yes.
But what is that action? And fear is knowledge is the enemy of fear. So getting a little bit of knowledge will help them dissipate the fear so that they can take the action. So that's what we're hoping for them to do.
Great. That makes people more comfortable, doesn't it, in the market?
Well, they do. They always like what you tell them to, so they do. I do whatever Janine tells me to do, and that makes me feel comfortable. I do what you tell me to because that means you don't yell at me or punch me or something like that. But anyway, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and give us a call now. The number you need to call is 0392909988. That is 0392909988. And to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, I know, Janine, there's so many people out there busting at the chops to talk to us about what's going on in the market now. So pick up your phone now and get dialing.
While we wait for you to call, it is the second Tuesday in the month, and this means we take a look at the sectors on the Australian market. So let's get into the charts.
Okay. On the screen is our normal watch list of all the sectors, and it's a yearly chart, so it's showing you what's happened since 1 January. Now, I know the last 12 months on our market has just been absolute crap, hasn't it, really?
Oh, look, when the market's sideways, that's the problem, isn't it? The stocks take off, and then all of a sudden they pull back, and they take off again and pull back again. So
what is this telling us, this watch list?
Okay, information technology obviously was hit hardest, so there's no beating around the bush there. The infotech stocks have been sold off heavily, and we talked about this recently, that this would be a real area for people to keep an eye on and watch. Consumer discretionary is another one that's really important for people to keep an eye on at the moment because of the threat of higher inflation and people potentially holding on to their money, which, I think about this, I think, okay, someone who's got a loan, fair enough. You were saying on the show last week that interest rates are not high and that borrowers should have factored in much higher rates in their spending anyway.
Absolutely, they should.
But who are the people that should be out there spending? It's the retirees who have heaps of money. You're not going to take it all with you.
How many retirees do you know that have got heaps of money when nearly 75% of people are retiring on some form of government pension? That doesn't mean you've got money.
No, that doesn't. But
that means you've got an existence.
There are still a lot of people who have significant amounts of money sitting in cash.
But they'd be worried. They'd be concerned about what's going on in the market. They'd be concerned with energy prices and all sorts of other stuff. So they're probably being a bit reserved and not spending their money and keep it in the bank.
And you think that's your advice for tonight, is it?
What, keep it in the bank? I'm not saying that. Okay, so keep moving on.
All right then. Okay, so we've got communication services down 17.8%, another really good area to keep an eye on as well. It's funny, isn't it? Because we're saying these are all good areas to keep an eye on.
But they're very heavily hit.
Yeah. Healthcare, look, CSL has been tracking sideways for so long, and there's a few stocks on there that have been sold off heavily. We thought they might have made a bit of a recovery, but they've just come back again with the sell-off. So it'll be interesting to see how they fare over the coming weeks. Financials down 12%. we were looking at a small loss on financials, but today we saw quite a significant sell-off on the financials, but they did try to make a comeback.
Later in the day,
yeah. But the challenge with the financials now that they have fallen like they have is that we could see them fall a bit further. That's the challenge here for investors trying to catch a falling knife and think, oh, look, Westpac's cheap or ANZ's cheap. Well, not necessarily so. No. They could be at their bottom, but we don't know that yet, and that's the thing. So consumer staples are down 8.6%. We know that Woolies, Coles were sold off. There's some really good opportunities in that space still to keep an eye on. Industrials down 5% have fared better, which tend to do that in these sort of they say that value-type stocks are better investments, and certain niche areas, like obviously energy's done really well, are better in these times. Materials.
Still up 1.67.
But I mean, we had this really strong materials sector with BHP and Rio some time back, and now as we've watched, as time's gone on, it's the shine gets taken off it.
Yep.
We saw Fortescue get sold down. I think BHP and Rio, we'll just wait and see what happens over the next couple of weeks. But utilities up 16%. So we've seen some really good moves there in some of the utilities type stocks, and AGL's held up really well.
Yeah, well, now it's not going to demerger, which I heard just yesterday or something, I think, or the day before. I don't know when the announcement happened. I just looked at it and saw it, but they're not going through with it.
Yeah. So we've had AGL off the list for a while. Obviously, that's why you haven't seen it until just recently, because we took it off because what was the point in having it on there when there was a demerger coming up? We don't know what that means. So, and then energy up 32%. So obviously that's the key area that's done really well, and I think there will be some really good opportunities still in energy going forward. Yeah.
You know what annoys me the most?
What's that?
Is when I turn on the TV and and they've got the news on and they're saying, oh well, the market's been sold off because investors, implying that retail investors were selling off the market for fear of rising interest rates and a poor economy. I think that's the biggest bullshit I've ever heard. It's like, seriously, as if retail investors control the market. They can't. It's the big end of town using this sort of information. The Dow fell off on Friday night, and so it's the big end of town using the psychology of the market now to push things around so they can make more money.
Well, you think about it, the toughest thing for some big managed funds that are index funds is the fact that if they know the market's going to fall, they have to reposition their fund to match the index.
It's got nothing to do with retail investors being worried. So, I mean, retail investors don't like selling.
Well, you know what my thoughts are on the shorting. Someone's got to have given up the stock for them to be able to have sold it off heavily. It's not just companies or big funds selling the stock down. It's also the shorting side of things that's having a bit of a go here at the moment.
Well, just before we move on to the next section, yesterday I got a call and did an interview with one of the journalists from The Australian about some new artificial intelligence platform that trades for you. And he said, is that as bad as the algos? And I said, you don't want to know what I think. But that's a whole new story, and I know what you think about it, but it's like, seriously, it's not something to be worried about, but it is interesting what's out there in the marketplace.
Definitely.
But anyway, so is that all we're going to talk about on the sectors?
Yeah, I think that's it for now. All right, so we should move on from the Australian market. Obviously, that we've just covered the major sectors on the Australian market. It's interesting to keep your eyes peeled to what's going to happen over coming weeks. It's now time to get into our first email for the night.
Alrighty, our first email question is from Asella, I think is how you say that, who says, hi, Dale, I really enjoyed the show. I'm holding the stocks below with a loss. Would you be able to help me reduce this loss? Sell, hold, or average? Just to let... Now, what I want to do is let everybody know that Asella has listed, she gave us a little bit of spreadsheet with 15 stocks listed in the table, of which 12 are in negative territory, 2 are breaking even, and 1 is in profit. And of those losing, 4 of those were losing over 30%, 1 or 2 nearly 50% in price. But Asella, we're not going to go through all 15 stocks for you. That's just not what we do. I'm not going to tell you to buy, hold, sell, or whatever else, but we're going to help you out anyway, aren't we?
Why is that? You better explain why.
Well, we don't give financial advice, and for us to go through that in that we only ever do one stock for anybody anyway, so that's all we ever do on the show, to give everybody else a go. But you need to know why you're doing things and why you're buying, why you're selling, and how you're managing the portfolio. Because when I looked at the stocks, she's got a mishmash of stocks in there. She's obviously bought stocks on a downward move instead of maybe trying to pick cheap. There's a whole range of areas issues that she's got with the portfolio, but we don't give financial advice.
When were they purchased, did you see?
No, all it is just the stock code and how much she's losing or making on those stocks.
So potentially she's just been losing recently because she might have bought in the downdraft.
But that's
a tough time.
It is a tough time, but we're totally in the dark. You know, we don't even do that for our students. Go through all their stocks and tell them what to do with their stocks. We teach them what to do.
Look, obviously she's stressed about it, and
Absolutely,
I actually feel for her. And it takes a lot of, I guess, inner strength to actually put that out there and to try to talk about it. So it's good that she is bringing it up. But perhaps we can use that. You were going to bring up one example.
Yeah, we'll just pick the first stock that she listed was A2 Milk. So we're going to have a look at all of that. But as I said, there's a few stocks in there that she just shouldn't probably have bought. And again, we're blind. I don't know what a buy price was, what a date that she bought with, how many shares she's bought, a position sizing, nothing.
But it looks like that they were falling. You're saying when?
Well, just from guessing it, like A2 Milk. If you bought that in the last, if we look at there for the last 2 years, if you bought it, then you've been buying a falling knife. And how many times have we bought this up on the show?
What price did she? Can you remember what price she bought it at?
I've already said that.
Can you say it again for me?
All I got was the stock code and how much she's losing or making.
Right.
Nothing else.
Oh, okay.
Zero information.
Righto. Because I can't see that. I can just see the chart here. So
yeah, I know. But
looking at the chart, it's possible that it might have made a bottom. There's a very real possibility.
It's possible
that A2 may have, but A2 needs to get above $4.89 over the coming weeks or months to prove that. But if it takes out this low, then obviously it's going to continue that decline, this low here, if that doesn't hold.
Well, all I can suggest to help her is for her to buy my book. That'll give her the rules and tools to help her understand what she did wrong and what she needs to do to fix a portfolio. Or you need to go to a financial advisor or somebody who understands the stock market who's licensed to give you advice. But then to do that, you're going to need to go with them with all of your contract notes, when you bought, why you bought them, and all the different things around that, so they can actually have a really good look at your portfolio. But even then, you're going to have to pay somebody to do it. You really are going to have to pay somebody to do it. But I can't sort of give you more than that, other than, we think A2 Milk's may be finding some support, but it is looking bearish. But if you do want to chat to Janine and I, make sure to pick up the phone now, ring 92909988. But that's it for A2 Milk, Janine.
All right, our next email is from Chris. Hi, Dale and Janine. Would love to get your thoughts on AGL. I bought into this stock on the 27th of May for a short to medium term trade with an entry level of $8.77. I have set a stop loss of $7.60, which allows me to only risk 1.35% of my portfolio. Can you please provide your feedback on my decision here with this stock and the stop loss positioning, given the stock's momentum in both directions? My concern is the energy sector having some resistance around the 12,200 level that may affect the stock with a pullback at some point. I watch your show most weeks, generally in bed with my partner, who is Dale's biggest fan. Can you give a shout out to Liz, please? Thanks.
Hey, okay. Liz.
Fantastic, Liz. All right.
My wife has told me off because a lot of women take me to bed, they tell me. So I'm watching. Sorry.
Oh, you're hilarious. All right, AGL.
AGL.
Okay, so we're looking at...
I think it's nice they watch in bed together.
Now, what we need to do is quickly have a look here. We can see my $7.60 mark's just gone crazy and jumped away. But you can see there's a stop loss down there, which is great, that there's a stop loss in place there, and the buy price was at this point. Now, I don't think there was anything wrong with buying where they did.
I don't agree. I don't disagree with you there.
Because it was still, it had gone up and it was still moving in the right direction, the overall trend. It's not saying it's down, the trend itself was up. The problem is just the market at the moment. That's really the problem.
His risk is fine. Where his stop loss is fine. I think where his port's fine. Now it's come out and said it's not demergering.
Yeah.
We'll have to wait to see what's happening with this stock, but it's not falling away, so it's looking all right.
Yeah, and perhaps we can just put a trend line up there and just see whether it's just holding in there. It's just nice, isn't it? The way it's saying it's just gone below that line now.
Okay, what about he's mentioned possible resistance on the sector? Would that worry you at all?
Not necessarily. It depends how big a stock is in the sector itself. So that's one thing. But It could be taking a breather given the rise that it's had, but we're going to have a look at the energy sector a little bit later as part of the discussion. So perhaps we can cover it off then.
Okay, we can do that, as I said. But anyway, if you do want to call us, give us a call on 9290 9988. We'd look forward to chatting with you. Now, the next email that we have is from Robert, who says, "Hi Dale, I have a question about MMM or Triple M. I bought for $2.07 on 25th of August 2021, hoping that will be going up, but unfortunately it's going down until now. I'm down 80% now and still hoping that eventually it will turn and start going up. I didn't sell it earlier because I think as long as I don't sell it, I haven't lost it yet. I think that as MMM touched the bottom, is there hope that it will go up now? Thanks, Robert from Sydney." He's used the word hope twice. That's really important because hope doesn't, it means he doesn't have a proper strategy on this stock if he's hoping things will happen.
Yeah, well, I think that's why he's writing in. I think he knows that, and but he is hoping, like, you can still have hope and hope that the share is going up, but you still have to have rules, and that's the point you're making, isn't it?
Yeah, he's still got to have rules, and so where he's bought it in August 2021 on the chart, it was already falling, mate, wasn't it?
Yeah. So, I mean, if I look here, I want to really look at this bottom down here. You can see there it's right on that bottom. So I just wanted to just quickly check. Yep. And sometimes stocks, when they come back to these lows, can bounce and start moving back up. It could be a nice support level for it. But I used to love saying to people, never think that a stock can't go lower because it always can.
It always can.
So that's the real risk with it right now, although, you wouldn't think it would go too much lower. It's already at 20 cents, but hey.
Well, you don't. And the thing is, it's about tidying up the rules and everything else. So he's lost 80% right now. He said that, or around 80% right now. So is it worth him hanging on, or what's going to happen? Well,
that's a decision he really needs to make, from this point on. Does he want to risk the rest of it, or is he, comfortable just waiting to see what happens from here? I mean, from my perspective, if how can I put this in such a way that doesn't... I guess how much has he got to lose now?
Well, we don't know. He doesn't say, but
he's lost 80% of his position.
Correct.
So it's really about deciding, is he willing to take the risk and risk the rest of it in the hope that it will recover?
There's a mistake he's made. One is he's bought in the wrong spot. He's bought in a downtrend already. Second mistake is if he hasn't sold, he hasn't lost, because he has lost.
Yeah.
His portfolio, if he had to... you always need to look at your portfolio as if you had to liquidate it today and put it all into cash and you're forced to sell. Just because you haven't sold doesn't mean you're not suffering loss, because you are, because you're down 80%. So never ever think that you haven't lost because you haven't sold. But is it a really big issue which way the direction of this stock goes from here and out?
Look, I mean, I want to just talk about this too from a more... not from a fundamental point of view, but just thinking about this company. I just can't believe that there can be such a huge difference that this is not worth more.
Oh, look, I agree with you. It probably could be worth a lot more.
I haven't looked at the fundamentals.
I haven't looked at the fundamentals either, but you think it's probably been oversold because it took off like a skyrocket when COVID hit, because everybody had to buy, they were buying meals in, they were getting home delivery of all that sort of stuff. So people jumped on it. But he's now down 80%. So it's about having a process, and that's what you and me talk about all the time. It's regardless of what direction anything goes in, is what is your process right now? So have you got a line in the sand if it falls further? Or have you got a process around, well, what if it does go up? If it goes up a little bit, what would you be doing? I
guess I'd be reading to find out what's happening with the company first, for a start. Not necessarily what the directors are saying about the company, but the actual numbers, and find out... are they still selling their product? Is it still going to homes? How much of a loss have they had in terms of the take-up of their services? Well, they might have a big influx of new clients during COVID, and now maybe people are cancelling, now everybody's come back out again and eating out again. I don't know. But they're the things you're suggesting to go and look. So go and look at their website. Either go to the ASX announcements or go and look at Marley Spoon's website. I don't know about you, but it's, there are some meals that people can order, which I don't know if it's Marley Spoon works, but you could get the product and then put it in, some of it, probably put it in the freezer and freeze it. At least then you've got meals there for if you need something. Yeah, well, that's not going to help the share price. That's good for busy families. The food's sitting in your freezer instead of you buying more for the company. No, but then you eat it over time. I'm not saying but it's about the company making profits, Janine. Well, people maybe go out and buy some more Marley Spoon. Janine. Well, Janine, I really do think it's time we get into our topic for tonight, and this is a hot one. And dare I say, a little controversial, given governments around the world push
for climate change and energy. So tonight we're going to get stuck into coal versus renewable energy stocks. Now, Janine, you're always reminding me to be environmentally conscious, and so I'm sure you're all revved up to have an argument about this one tonight.
I am just sitting in the green corner waiting for the bell to ring so that I can come out punching.
Yeah, with your pink boxing gloves on, I suspect. Now, before you start punching, Janine, what's even more exciting is for our viewers, or is that we'll be sharing our current outlook on the best energy stocks on our market to buy this year and what to expect in the energy sector.
Dale, the best thing about tonight's topic for me is that apart from having the opportunity to discuss some very interesting stocks, that I get to argue with you as to whether investors should put their money into coal or renewable stocks or both. I know some of you will be pro-coal and some of you pro-renewables.
Okay, Janine, despite the dangers of us letting loose and having an argument live on camera, as this could really go anywhere, what we will discuss will be beneficial to our viewers and very constructive conversation. So, and also healthy for them. So, Janine, you've had better get those pink boxing gloves out now as the bell is about to ring.
Yeah. Those are fighting words. I do understand the arguments from both sides. We do need to look after the planet and the people on it. We also need energy to live and to continue to run processes in industry that support society. The previous Australian government committed to zero emissions by 2050. The current government has promised net zero emissions by the same time and 43% by 2030. 3030 would be an interesting time, wouldn't it?
3030, God, we won't be around.
Okay, and then looking into renewable energy, seeing Australia as a superpower in that space. And they've also committed $20 billion to being invested into the electricity grid to handle more renewable power.
It is true that renewables are increasingly important, and this has to be a good thing for the planet. However, we need more energy now, and coal is vastly cheaper to generate it, and so it's not going to go away anytime soon, whether you approve of it or not. Now, I do care about the environment too, but we're not here to debate the environment. This is about investing in areas that can make investors money, which requires a balanced approach.
That may be the reality at the moment. Given the economics and people's jobs at risk, I do feel for them, but it doesn't make it right. When coal is burned, it releases pollution and toxins, including mercury, lead, sulphur dioxide and other heavy metals. None of these are good for us, and we need cleaner technology to continue, which I am hopeful about. So if investors don't agree with using coal to generate electricity, they can vote with their feet and purchase green energy, use solar and look for more stocks that support cleaner energy.
Yeah, people can vote with their feet, but that also means they need to accept higher energy costs, as renewables have been proven in other countries to result in higher costs, and we are seeing that today right here. Now, I'm all for cleaner air, and technology is moving towards making coal cleaner, and this can't happen fast enough for me. Low emission plants are significantly reducing emissions by around 40% so far, and that's got to be a good thing. But getting back to investing, Janine, I think investors ought to have exposure to good companies that are or stand to profit, regardless of whether they are renewable or not. And remember, it's about making a return over time. Now, we're going into a graphic now, yeah?
Yeah, I have done some research. So let's take a look at this graph. In 2020, only 7% of energy came from renewables, according to the Australian Government, Department of Industry, Science and Energy Resources. Imagine if more people and industries using energy shifted, and investors can influence this. Government policies also influenced by individuals. So what do you think?
You reckon? Well, I'm really surprised. 7% renewables. Like with every, I mean, I understand most energy is used by corporations in manufacturing. So I mean, but for me, 7%, that means
I was a bit shocked.
Only 7,100 homes might have solar panels on.
Yeah, well, that was 2020 numbers, so it will obviously be more than that now. But I just really was surprised to see those numbers so low.
I just think it's really, really low, because you'd think if you're in an industry, you'd be putting solar panels all over your manufacturing roofs to reduce your energy bills.
I mean, what it shows is that when you're looking at, say, for example, oil, currently it's saying that 37% of the energy consumption is from oil. Coal, 28%, gas, 27%, and renewables, 7% to come up to the total. But if we look at what's been happening, average annual growth, we're seeing the decline in oil. Over the last 10 years, we can see the growth there, but just in that year, 1920, we can see it was down around 7%. Coal was down 5%. Gas was up 3.8%, which surprised me, and renewables up 4.6%. So, it's not moving fast enough, really, is it?
How much did you say the government was putting into renewables?
20 billion into the electricity grid, though.
That's 2/5 of stuff, all of what we'd actually need. And they should have been doing that 10 years ago.
Well, look, you got no argument for me on that, and I'll put the boxing gloves down. Thank you very much.
Thank you very much.
I think I won.
So we finished with this, Graf? Can we move on now?
So I believe investors can have an influence.
Not a hope, Janine. That's where we really disagree. Now, most of the money on the market is controlled by big fund managers, and let's face facts. Everything follows the money, not the other way. If there's a lot of money to be made in renewables, then things will change really quickly. Investment will flow and fund managers will jump on this area like flies on a barbecue.
Well, that's very Australian of you.
Now, for individuals, unless everyone joins a group like the Australian Shareholders Association, who only have around 5,000 members, or we all move our money en masse to funds that support renewables, it's really difficult to exert any real influence.
The biggest challenge for change is that earnings from resources and energy exports amount to hundreds of billions, and coal is Australia's biggest earner next to iron ore, bringing in excess of 100 billion into our economy. What do you think of that?
Well, I can't argue against that, Janine. It's exactly my point anyway. Now, lots of money is being made with energy exports like coal and gas, and if lots of money was to be made from exporting sunlight, then that's where the investment money will flow.
That is very true, Dale. Economics always seems to win what's right for the planet, though. That's the thing. No government is going to give up that income easily.
No, they're not.
And what would happen if we just turned off the tap? Your point about exporting sunlight or the sun's energy is actually a good one. We're not at that point. So why don't I put the gloves down for now? Everyone watching wants us to share our thoughts on some of the best coal and renewable stocks as we consider what the best energy investments may be in the second half of 2022.
Okay. Well, let's go to the charts then, eh?
Why not?
I'm not going to argue on that one.
You're not going to argue with me on that, are you?
No. So what are we talking about here?
All right, now...
Whitehaven Coal. No?
Yeah, Whitehaven Coal's actually done incredibly well. I know that some of the students were trading this one.
They were?
Look, I don't know about you, but at the moment, it looks like it's peaking out, I would say, at the moment. So we've seen the gap down today. It's had a really nice run. If we put a trend line up here underneath that run, we can see that it's probably a bit of a challenge to get one up underneath there at the moment. But look, I can probably do that. But it's just a beautiful trend, isn't it?
So you're expecting energy to continue to go on, even though it's up over 30% this year so far?
Look, I'm expecting some of the energy stocks have the potential to do that. Yep. I mean, we've seen Origin pull back quite strongly. It just dropped out of bed, fell 15%. And then... but at some point it will recover and start moving back up.
Energy itself, the sector has big runs, doesn't it? It really does. Are we actually going to look at the energy sector at all? The actual chart of it?
I didn't want to just jump in like that. I wanted to talk about coal.
I'll shut up then. Okay.
Okay. So we're seeing here lots of peaks on this coal stock, and so therefore we could expect it to do the same thing again. Potentially a lot of resistance up around this 640 level. We're looking at Washington Soul Pattinson and Co. At the moment, it's down. So this is one to keep an eye on and to watch what's happening. There's a long-term angle of that trend going right up there, which it may just be coming back to before it starts to move back up. But it looks really bearish at the moment. But then things can turn around. So I would be keeping a close eye on this one for a turnaround. But
I know a few of our viewers actually watch this stock too.
Yeah. Obviously, to try to catch a falling knife's not the right way to go. Just let the suckers get in there at the bottom and then wait for the turnaround to happen on Soul Pattinson. New Hope Corp has just been trending up beautifully. So, with some of these stocks, you may be sitting there thinking that you've missed the run, but that's not necessarily the case. So you've just got to give it time and wait. this is very similar, isn't it, to
It is very
the
similar.
first
I'm
one we
looking
looked
at
at,
that.
Whitehaven Coal, the chart. And sometimes when people are trading stocks, sometimes they can actually trade two
Yeah, they can.
stocks, because if it moves in the same way and it's got a history of showing that, which this stock does, then why wouldn't you trade both?
Well, that's where we argue in the books that we talk about. I mean, some people come to us and say that they've got to have so much in each sector, but it's like we say, well, if they're going up, just buy them. Who cares if you've got two or three in the same sector? If they're going up, why would you hold stocks that aren't going anywhere?
Yeah, you want to have at least a couple of stocks in the one sector if it's running like energy to support the portfolio, especially in times like this when the market pulls back, they can provide that buffer. So that's New Hope.
So New Hope, so that's looking all right.
Yep. Now, I thought I'd bring up, this is interesting, this is actually a climate change innovation ETF. So we've seen it. Now, the challenge is that if you're buying into ETFs because you want to get some exposure to the greener side of things, it doesn't necessarily mean that it's going up. And you can't just, you've got to treat this like a stock. Is it rising? And at the moment, no, it's definitely not. And it could fall further. That's the risk at the moment. Let's just have a look at how far it's already come back.
Like 30% or more. More
Yeah,
than 30%.
so in some cases, there were stocks in that space that potentially would have been better. This is, I think, a global one, beta shares.
I was going to say it's probably a global one, probably not just an Australian one. But yeah,
so it's 37.6%. That's, or a bit more than that probably, because I haven't quite grabbed the bottom there. But you see my point. It's a significant fall. It's like the tech stocks, isn't it, really?
Well, yeah, absolutely it is. But so obviously when this bottoms out, you'd say to people, if they do want to have a broader exposure to it, well then
that could be something to have a look at.
But you still got to treat, as you said, you got to treat this like a stock, because you're buying one ETF, and that's where people think they're getting diversification out of buying an ETF, but you're not really. All you're doing is they would be investing in lots of companies which are probably not necessarily the big companies.
And if the whole space falls, the whole sector falls, then you're going to fall anyway.
You're going to fall anyway with all that anyway. So, but it's, if people do want to invest in an ETF that has exposure across, the broader sector there, then that's fantastic. But
yep. Now we're going on to the energy stocks before we get to the. Actually, I'll go to the energy sector now. Otherwise, you're going to start.
Because you've got to decide whether it's coal or renewables, don't you?
Yeah.
And which of the stocks we should be looking at buying.
Well, coal at the moment's had a run.
It has.
So this is where the renewables might be more interesting, and energy still has a part in this. And looking at the energy chart, we can see right now there's nothing on that energy chart right now that tells us to be out of that space.
No.
Right? Until it tells us that, then we're still thinking that this could and has the potential to go up further. Yep. I mean, looking at the levels of potential resistance for it, I would say that there's somewhere around 13,000. I'll get my glasses on.
There's a long way to go, isn't it? I mean, it was up at 20,000 back in the early 2000s. Now it's 11,000.
Yes.
Yeah, under 11,000.
Yes, and it could keep rising right up to 15,000 as well. That's another possible point for it. So there's still potential here for upside again. That's not to say that just because a sector has a really good year, it couldn't have two in a row. They can. We've shown that.
No, they can have very much so.
So that's the energy sector still looking interesting there. And Origin's one in particular. I mean, it got sold off and probably shocked a lot of people to see that happen. It just got sold off, that huge fall in one day, and it's just really continuing on this rough ride at the moment. So right now, you'd be glad if you're out of this one for now. I'd be just waiting until it starts moving back up again.
But these sort of moves, they start to excite us, don't they?
Yeah, we just sit there and wait now and just see when the next opportunity comes up to trade it.
But even when you're looking at Origin, if we go and look at the monthly chart, you can see way back here, we're talking about August 2008, it was, 1673, and we're talking about now it's at under $6.
Yes.
So there's huge possible upside here if this thing gets on a trend.
Yep.
So that's what I was saying is when I was asking you before, is there more legs in this energy sector? And it could very well be a lot more legs in this energy sector for people, even though it's risen over 30%. So don't discount it because it has run really well. There's plenty of legs in some of these stocks.
Yep, I agree. So if we go and look at some of the individual stocks, now these are some of the renewables stocks. So actually it was interesting to see that there were a couple that have been taken over or delisted. And I find that it's a real shame when you see some really good little companies that are doing some great things get taken over.
That's going to continue to happen.
We just seem to grow all the right veggies in the garden in Australia, and then we just send it all off overseas, don't we? All the best
I think I understand your metaphor, but yes is the answer.
Well, it's like oranges. You could not find really nice big oranges anywhere. Why? Because they were all going overseas.
I know.
Because they want them bigger over there, whereas we accept small ones.
Well, let's get down into energy and let's just talk about gas.
You're changing the subject.
I am, because that's the subject of our topic tonight.
Just trying
energy.
to get you revved
But
up.
how much gas do we send offshore?
Oh, 70% of our gas. Now, the government stuffed up because they made a dumb deal and allowed the retailers, I think, or the energy companies to be able to do that. And why is that? I mean,
so who was the idiot in the government that did that?
So we could have so much cheaper energy, you would think, with all gas.
Correct.
If that wasn't the case.
Well,
but then they would have to be regulating the industry, and they do regulate it, but they try to keep it as unregulated, I guess, as they possibly can.
But who owns the gas? Is it Australians? Is gas for all of Australia, or is it just gas for some certain companies to profit on? That's the point. And you're saying, well, the government's allowed them to sell it offshore and give them the right to mine the gas. But surely we still should be looking after ourselves first.
Well, you think so?
It's no use sending, no use, like we send all our iron ore over to China and then buy it back as steel. They're value added. We're paying, and our steel prices have gone through the roof because we don't manufacture so much anymore. So why aren't we looking at some things like this? And especially energy, like coal. We're sending bucket loads of coal overseas. We can't get it out of the ground fast enough at the moment. And I don't see that slowing down either.
When prices are so high, because we've had a boom.
But we need to generate electricity and we need to power up the homes and industry. So why haven't we been looking at this? So
Good point.
That's my beef.
Now, so we're looking at Meridian Energy here.
Yeah.
At the moment, it's falling. Yep. So we just need to allow that to unfold and then wait to see what happens. It may have potential. I'm not saying it does
I think
at this point.
Further to go.
It's got further to go to the downside. But these are the sort of things that you look at. If the shares are falling, it doesn't mean that you walk away from them completely. It means just keep it on the watch list, wait until a better time.
I think we're going to see a lot more mergers and acquisition in the space, because that's what some of these companies do. It's these bigger companies. They just watch to see who's doing a good job, and eventually when the time's right, they just go in and go, okay, we'll take you on. Whether it's an AGL or whether it's some other company in this sort of space that will start gobbling them all up, they probably will.
Yep. Okay, and the next one we've got is a new energy solar, which I found interesting because it looks like it's just bottoming out there.
It does.
Intrigued me. And okay, it's been sold off on the market today. We obviously need to see it get back above this little short-term high there in June to give it some hope of moving back up. I think that, if it starts heading up and it takes out these highs, then you'd have to say it's on its way again.
I would too. It'd be interesting to see. These guys, the new energy solar, I'm assuming they're in solar energy because of the name and that sort of stuff. But
yeah, I just thought with, the whole push for solar, and I haven't looked into the exact detail, their books to find out what's happening. But that's what you can do, is go and do some research on some of these companies and find out what they're into, why the share price might be down at the moment, and then what are their prospects going forward. So, but the chart's going to tell you at the end of the day when things are actually turning in the right direction, aren't they?
So when I'm looking at all those charts, the stocks that are exciting me are all those ones that you're telling me
have been sold off.
Yeah, the ones that have been sold off, but the ones I really, really like are the gas and the coal ones. They're the ones I really, really like.
Well, because the coal have been trending so nicely.
But they're the ones that I would, if you were to say to me which ones you would buy, I'm going to be looking at coal and gas. Those are the stocks I'm going to be looking at.
Because you'll wait for a consolidation and a pullback first, Yeah,
absolutely. And because they're the bigger stocks too, because if they'll start to take off before
except for
anything
Origin,
else.
Obviously. Origin's got a lot of, exposure to the renewable side of things, and that's growing.
They do.
And AGL's another one that's growing in their space as well.
No, I agree with you. And I think, as I said, I like those ones over the renewable energy ones. But I know people go out there, and I've got friends who are dyed in the hard greenies and all that sort of stuff, and we have discussions, and I said, well, it's great. And they said, well, such companies doing this, and I said, well, great, go and buy their share. And they go, why would I? And I said, because they listen to shareholders. Unless you're willing to buy the share, how are they going to listen to you?
But there's another side to that as well, because I remember we had someone come to us years ago and say, they were just having a bit of a chat and saying they were going to buy this particular stock, and because they were looking at the greener sides of things, wanted to invest in something that they saw as positive. But the problem was, when we looked at the chart, there was it was like one of these that was down like these. It wasn't ready to buy yet, but because of their desire to do the right thing in their mind, they were risking their their hard-earned money. Now, maybe some people are willing to do that, but it doesn't make sense not to wait, because you can still buy into these companies if they do go in the right direction.
Yeah, but you're not really supporting it. By buying the share, the company's not benefiting that.
But
because the money's not going to the company.
That happens when it's floated, obviously.
If it's issuing more shares, it's a different ballgame.
That's right,
but if you're buying it off the exchange, the company's not benefiting at all. All you're doing is supporting the share price.
Well, if the share price goes up, it actually does help the company, because obviously a higher share, if this stock gets back above $1, that's going to help that company, because more funds will be looking at it and be supporting it.
More funds will be looking at it, and more people will be looking to take it over or investing in it, and they could raise more capital and all sorts of other stuff. But it's at the moment, as I said, I'm still voting.
You're going for the ones that are trending up, which is what you always talk about.
I'm going for the one we're making money on, not the ones we're not going to make money on or have a little bit of a harder go at.
Fantastic.
But some of these alternative energy stocks do look interesting to me, though.
Yeah.
But I wouldn't put a lot of money into them.
Okay, so what you're saying is, we'll just come back a little bit. Okay. So if we're looking at these stocks, they want to be looking for nice trending stocks. Correct. But some of these could be sold off in the short term. It's finding the opportune time. To buy them, because if they're going up, the theory is they're more likely to keep going up.
Correct.
The ones that are going down, the risk with these is they could fall further. Correct. So at the moment, this is just sort of holding around this level, but if it goes below that level in any strength, we know that it's more likely to keep falling. But it just means that it could be longer before you get the opportunity to buy into them. But you're also thinking about the liquidity of the company and the size of the company as well.
I'm not going to put big money into these ones.
Into a really tiny one.
No.
Now, this is a $4 stock, so that's not too bad. The size of the company, this company is actually reasonable. But when you're talking about these smaller ones that are trading at 80 cents or something, that's what you're talking about.
That's what I'm talking
They're
about.
The higher risk ones that people really ought to be super cautious about putting their money into.
So what a good summary. So that's a really good summary from you, even though I was supposed to do the summary, but that's fine.
Did I take the words right out of your mouth?
You did talk, but so we still like the energy sector. We still think there's plenty of opportunity in the energy sector. There's plenty of long way to go, and there's some great stocks in it, so go and have a really good look at it. But that is it for our topic for tonight. Now, before we get into our next email, I do hope you have your phone ready and you've been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now, the number you need to dial is 0392909988. That's 03 for Melbourne, 92909988. So get dialing now.
While you call us, we will get into answering the next question, so call now.
Now we have a question from Priyal, who says, "Hi, Janine and Date. Date, who's Date? Or maybe they misspelt it. Dale. It's supposed to be Dale anyway. I purchased 50 shares of ANZ on November 2020 at $22.42. There's too many twos in this. As a long-term investment with a 12% stop loss. Then I topped up 75 shares on the 5th of January 2021 at $27.98 with a 12% stop loss, and 100 shares on the 28th of January 2022 with the same 12% stop loss. My average exit price is $22.76. With current market conditions, should I consider my stop loss to exit? Can you analyse the ANZ stock and provide some advice? Thanks, Priyal."
Right.
There is so much to talk about on that email.
There is indeed. Just, looking at the chart as an example, you can see that some of the levels that we're talking about, unfortunately, Priyal bought up here. Now, it wasn't necessarily a wrong thing to do. It was trending up, nice stock, but the first buy was when it just started to move up in that nice trend. So it was looking nice. But the interesting thing is the way that the risk hasn't really been considered in this situation in terms of adding to the position, building up the position, but not just building the position, building it in bigger lots as the stock price rises.
All he's done is increase his risk more and more and more, because he's done it absolutely back to front, completely back to front. You don't buy more of a stock, firstly, unless it shows you strength. But
well, no, he has bought
even bigger positions.
I want to hold you to account on that for Priyal, because he's bought in again when the stock was showing strength.
But he's bought more than he originally bought.
Right.
So that's increasing his risk big time.
But there was nothing wrong with buying a stock that continued to show strength, is what you were saying. But it's just the fact that he's bought more than he started with, and he's just adding to his risk.
And then he's bought even more again on his third position, which we don't know
Yeah.
exactly where he bought that, but he's even increased his risk even again. So I disagree with his stop loss and I disagree with his process.
Well, he's averaged out the stop loss.
So, yeah, I wouldn't do that either.
Well, it brings the stop loss of the first position up above his buy price.
That's fine, but he's risking a truckload on that 27.98 purchase.
And the second one, whatever
and the second,
that is.
wherever that was, he's risking way more than he needs to on both of those. So averaging out a stop loss, I'm not sure where we got that. I would never do that. I would have a stop loss on my last purchase, absolutely, and I would exit all positions on that one. I wouldn't average out a stop loss, but I wouldn't have bought like he did. I think his strategy's really flawed.
Okay.
So,
but could he put an individual stop loss on each position as well?
He could, but
Where do you think the averaging of
why
the
would
stop
you do
loss
that?
comes from, though?
he's got his most risk on his last purchase. That's the biggest risk he's got on that last purchase. And every cent that goes down, it's taking more than, what did he buy? 50 in the first purchase and 100 in the last one.
75 and 100.
50, so he bought double his first purchase in his last one.
Can I just show you something? If we just have a quick look, we're seeing this one here. So it's down about 18 or 19% on the two positions that were bought last.
Yeah, but he bought double the amount of shares in his last one that he did in his first one, right? So every cent he loses off the last position, he's losing 2 cents of his profit on his first one. That's a crap position to be in. That's just really bad.
Yep.
So I'm not trying to be rigid, but that's just a really bad way of doing it.
I think crap is a really poor technical term.
C-R-A-P, okay? S-H-I-T, something like that. But
Now,
yeah, again,
look,
as I said, is it going down or up? It's going down.
Yeah, and I think
moment.
that he's really brave for actually emailing in about this one, and good on you for doing this, because this is a really good example that helps a lot of people to really understand the risk side of things and, you know, increasing your risk and what that means, and then being able to decrease that risk. So, yeah.
Read my book. Now we've got a caller, Janine, on the phone, and I believe, welcome to the Australian Stock Market Show. Who have we got on the line?
My name is Mac from the Gold Coast, Dale.
M-A-T-T or Mac?
M-A-C.
M-A-C. Well done, Mac from the Gold Coast. Oh, he's won before, haven't you, Mac? You've been on the phone before.
I have. That's right.
Fantastic. Thanks for calling in. You've got a question for us tonight?
Well, I have three comments. The first one is, I thank you for, in your book, showing me the sorts of things I'm doing wrong and I'm hoping to do better.
Cool.
The second thing is, on a day like today, perhaps we need to be reminded what percentage of cash we need to have in our portfolio.
Yep.
Third thing is, there seems to be a new book that appeared on your screen called Seeds of Wealth. We haven't heard anything about that yet.
It's because it's not a book, Mac. It's actually a DVD. So Seeds of Wealth is this one here you're talking about here. You can see it's a DVD.
Yes.
Yeah, I did. It's part of my investment pack. So we've got 2 DVDs. This was done... Geez, this is well over a decade ago I recorded this, but it shows you a lot about the market. There's 2 of them. We've got Seeds of Wealth and Powerful Portfolio. So they're both live presentations that I did quite a while ago, but they're full of good stuff. But they are on our website if you want them. But not a new book. I'll let you know when I write a new book, Mac. You'll be the first person I tell. How's that? So
thank you very much.
So we've got to talk a bit about how much cash do you hold on a day like today?
Yeah, well, that's a challenge, isn't it?
Well,
sorry, Mac, keep going. What did you say?
It drops.
With the drop today, so how much do we keep in cash? Thanks, Mac, for ringing in.
Well, the interesting thing there is it how much do you keep in cash after the drop or before the drop? Because most people didn't know that it was going to drop like it did, but with rules like trend lines, you probably would have only had maybe 50%, around 40 to 60% exposure to stocks anyway.
That is the question, isn't it? Because I know when the markets, we've talked about this before, is when we talked about when the markets turn from being bullish to bearish and things like that, and how the bigger stocks fold over and you're getting out of positions already before those big days are coming down.
Yeah, and depending on how they traded, they might have only had 2 or 3 stocks in their portfolio.
Correct. So normally how much cash would you keep in a portfolio?
Look, it really varies depending on what's happening with the market and the stocks. But, I talk about it could be fully invested when the market's bullish, or it could be down to zero, or fully cash when the market tells you that it's going to continue to go down. It just depends what's happening, but it also depends on the stocks. So if some of the stocks are actually going up when the market's going down, then you wouldn't sell those off.
Correct. Yeah, but it is in times like we've seen the last 12 months, there's probably not a time where you're probably full invested completely. There's probably there may have been times when you had a lot of your money in the market, because you don't always need to be in the market. And this is what a lot of people think: if they got money in cash, they got to be buying another stock. But you got to look at the risk of the market at any one time. Is it too risky to put all my money in the marketplace? So having 20, 30, or 40% in cash for the last 6 months or this year is nothing out of the ordinary, and I think that would be a smart idea, to wait for the market to be more bullish or being in a better psychological state, because the market has been very, very erratic of late, and that's why I keep saying in my reports that I put out every Monday, I'm saying, hey, look, just be careful, be patient, don't just jump into the market, because anything can happen at the moment, but it will settle down. We've been in this sideways crappy market for 12 months, even a bit longer, and it will settle. It really will settle in a not too distant future.
Great question.
But it is a brilliant question. Thanks, Mac. If you want to be like Mac, give us a call, 92909988.
Before I get into the next question, if you are listening to this YouTube live stream as a podcast, then we would love your help, and that means giving us a 5-star rating and writing a nice review. Now let's share the next question, which is from Jody. Hello, J and D. I'm stuck on horizontal moves and trend lines. I have a number of stocks that are drifting sideways at this time. The current bearish market is disrupting the trends on my stocks, and many are now near but not over their set stop losses. That is, the stocks are travelling sideways, moving beyond their trend line, but not below my stop loss yet. What is the best action to take in this case? Hold on, or sell, or wait until the stop loss is triggered? Or try and draw a new trend line at some point? One stock in this category for me is Telstra. Thanks, WW team. Great question.
Beautiful question, isn't it? I love it. She's very smart.
Very smart. So looking at Telstra.
Well, before we do that, she's got the question: would you hold, sell, or what would you do? Change your stop loss or readjust your trend line? What would you do?
Looking at Telstra, you want to talk about the example?
She said a number of stocks. She's just using Telstra as an example.
Would you stick to your
rules?
Yeah, it depends what she decided the exit strategy was.
So you would stick to your exit strategy?
Yeah, if she decided on an exit strategy and then she was waiting for that to trigger,
Stick to it.
At the moment, Telstra's probably blown through that.
It has. It's gone through.
But it's closed up at the end of today.
Yeah, so let's have a look at it. So let's bring it all up and have a look for her. Because I think it's a really, really great question, and it shows she's really thinking about what she's doing. So if we draw a trend line on this stock, right? So moving it up from there, this thing crossed the trend line ages ago. Ooh, what happened then?
You've lost control.
I've lost control.
I've told you not to play with this thing. You know that. You're losing control of the mouse.
You've got settings on it that makes me look like
the mouse likes me. It doesn't like you. You know that.
I know. It's probably because there you go. How's that?
That's much better.
Yeah. So it's crossed below an uptrend line a long time ago. So, but what you were mentioning was, obviously last week was a bit bearish, but this week it gapped down, he traded down, and came right back. That's a good sign. That is a really good sign.
But it doesn't mean that the fall is over, because it tried for so long to get through that $4 level.
Yes.
And sometimes stocks need to have this, and this could be a short-term recovery that then we see it go down. And
capitulate a bit
the
further.
risk with it is it could end up down at 340. That's the problem right now.
Absolutely.
With Telstra.
So stick to your stop losses and make sure
it's a day-to-day proposition. Like for anyone who was still in Telstra, you just have to decide, rule the line in the sand. Are you going to stay in it? What's your exit strategy? Because it may recover from here. But
we teach trend lines are dynamic, so don't adjust them all the time, but there are times when you do adjust, and we teach about that in our course. Like we have this massive chunk of one of our modules in our course all on trend lines and where you adjust them, what you're doing. And while we're on that, just to let everybody know, we're having an end of year special for people that want to renew students to enroll in our Diploma of Share Trading course.
Fantastic.
So just give our team a call on 1300 858 272. If you're just interested in doing a course, give them a call and they can tell you what the special offer is for the end of June. But we do now have an email from Liam. Liam says, hi Dale and Janine, are there any resources you would recommend to a young investor that could help them improve their knowledge and or relationship with money and investing? For example, books, podcasts, videos. I have a copy of Accelerate Your Wealth, which is my book, and I'm working my way through it, finding it very valuable so far. P.S. Go Cats.
So would you recommend, You've got some old favourites when it comes to just the whole philosophy around investing. What's your favourite book?
My favourite book on money, Think and Grow Rich. Think and Grow Rich, Richest Man in Babylon, another one, is just a brilliant book about money. And every young person should read it. If I could make every young person at school read The Richest Man in Babylon, that would be it. That would be
there might be a teacher listening that decides that that's the book for the year.
It shows you the 3 golden rules are in it, and they're the 3 golden rules we still live by today. So
excellent.
To me, that's a great book. But work on this, Liam, because this determines how much wealth you have, and it's about not just looking at technique, about buying and selling and investing. It's also about getting yourself prepared to invest.
You've got some really good podcasts too.
Yeah, we do that. Listen to our podcast, on that, because Janine and I do little bits of different things. I work a lot more with the 6 inches between our ears, and Janine talks a lot about other things, strategy, stocks, what's going on in the market a little bit more. So, but I just did a podcast recently on...
You've done some for beginners as well, haven't you?
Correct. I've done a beginner series. I've done a big trading. I've done trading psychology. I've done a whole range of different series on that sort of stuff on our podcast, so just go into that.
It's like having a library at your fingertips.
It is.
Our next email is from Paul. Obviously, a lot will be spooked by the sudden drop in the share market today, and a lot of stop losses would have been activated. Perhaps subscribers should be encouraged to manually work stop losses when the market's in this sort of volatility. As we know, in a correction, they can recover quite quickly, but too late for even wide stop losses. I'm working mine manually and ignore huge market swings as we can get trapped in that volatility. Paul.
Wise words.
So he's ignoring his stop loss.
No, he's not ignoring it.
He's setting it manually.
He's setting it manually, so he's not ignoring it.
So he's allowing the stocks to fall, and so there's 2 aspects here.
Well, you don't know that. He's just managing it manually. It doesn't matter. He's not saying he's letting it fall. He's just saying he's managing it, which is what we do all the time. We manage our stop losses manually. And I know this has come up a few times that people go, oh, should I set my stop loss in the system? And you and me never do that. It's just something we don't do. So we manually do that. We've got on our charts, we've got on all our documentation where our stop losses are, but we don't put them in brokers, because brokers are really good at pushing things through your stop losses because they know where people set them off, and it's below round numbers, it's below resistance support levels. It's they know where people tend to set stop losses because they see it all the time in their systems.
I just wanted to make sure that he wasn't just hoping that the prices would just bounce back. So he's taken his stop losses out, hoping that it's just going to bounce back. But what if it then turns around and goes back again? Is he going to then get out of his stop loss?
But that's where you need the skills. And I know, a month or so ago, I was in a trade in S32 and it gapped right down.
Yeah.
So that could have triggered an exit for me on some of our rules. But I looked at it and went, okay, do I get out of this, or do I use the rest of my knowledge to look at it and go, do I stay in or do I get out of it? Now, I decided to stay in and it went up from there.
Yeah, but that's a positive story. What could have happened?
And that's a positive story, but it could have, the next day it could have gone down further, and if it had, I would have exited.
Yeah.
But I still had rules around it, because occasionally you'll get stocks gap around you.
Yep.
They do that. Not all the time, but sometimes they will. And sometimes that gap means you're going to get killed. It'll drop you out of it.
But what you're saying is you've still got to draw the line in the sand.
You've still got to draw the line in the sand, and it doesn't happen often. Like, you're not going to get all your stocks dropping out of bed all at the same time. Not if you've got good stocks.
Yeah, so you might have some that you've just got to sell off and others that you can keep.
Yeah, I think it's very smart. Very smart.
Great.
I'm not negative of everybody, am I?
No, that's right.
So I'm giving a balance.
You are positive.
Sorry?
You are positive.
I am positive. I'm positive you did a good job.
Great.
Cool. All right. Well, that's our thought on stop losses and volatility. Now, I want to thank everyone who's taken the time to comment in the YouTube comments section, or has taken the time to email us. Now, we do appreciate your feedback.
You have been asking us questions, but now I want to ask you a question so we can help you. My question is, what would help you most to get what you want from investing? Write your answer below this video in the comments section. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review whatever podcast app you are using.
Okay, if you enjoyed tonight's show, give the team a big thumbs up. That means click the like button underneath our video to let us know that you've enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone, give us a call. We'd love to chat with you. If you are not able to watch live, you can email your question ahead of the show. You do this by sending your email, now get this, to info@wealthwithin, not on our website. And remember to include Wealth Within Live in the subject line. I can hear them all saying that. They know it by now.
info@wealthwithin.com.au. I know it. Anyway, we do really appreciate your support to the show, and show yours by subscribing to the channel by hitting that subscribe button now. Click the bell on the right of it so you know when we upload our videos.
Well, that is it for tonight's show. We do hope that you enjoyed what we presented tonight, and we have so enjoyed receiving all your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us tonight, and we hope you have a great week. For now, goodbye, good luck, and good trading.
Bye for now.